Mirae Asset Nifty Total Market Index Fund. Is this the perfect fund for a diversified, all-encompassing market exposure to be added to your investment portfolio? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what is Mirae Asset Nifty Total Market Index Fund is about. So, as an NFO, it opens on 8th October 2024 and closes on 22nd October 2024. And some of the key features of this fund is that it is an open-ended fund type which belongs to the category of equity flexi-cap fund. And it has Nifty Total Market TRI as its benchmark index, and there is no entry load as well as exit load in this fund. And the minimum investment amount you need to start investing in this fund is 5,000 rupees. And the fund managers for this fund are Mr. Ekta Gala and Mr. Vishal Singh. And according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the primary investment objective of this fund, that is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, which can be subject to tracking error as this is an index fund. So these are some of the key features and the investment objective of this fund. Now let us move on to understanding the index it is representing, which is the Nifty Total Market Index Fund. So the Nifty Total Market Index will track the performance of 750 stocks covering large, mid, small and micro cap segments. So all stocks that are part of the Nifty 500 index and the Nifty Micro Cap 250 index form part of the Nifty Total Market Index. The weight of the stock in the index is based on the free float market capitalization. So this index can be used for a variety of purposes such as benchmarking indexes, creation of index funds, ETFs and other structured products. Now let's move on to understanding the sectors represented in this index. So the sectors represented are financial services, IT, oil, gas and consumable fuels, automobile and auto components, FMCG, healthcare, capital goods, power, consumer services, metals and mining, consumer durables, construction, telecommunication, chemicals, construction materials, services, realty, textiles, media, entertainment and publication, diversified forest materials, utilities. So the highest weightage is given to the financial services by a weightage of 26.97%, while the lowest weightage of 0.06 weightage is given to the utility sector. Now let's take a look at the top 10 holdings represented under this index. So the top 10 companies are HDFC Bank Limited, Reliance Industries Limited, ICICI Bank Limited, Infosys Limited, ITC Limited, Tata Consultancy Services Limited, Larsen & Toubro Limited, Bharti Airtel Limited, Axis Bank Limited and State Bank of India. So from this, the top first position is given to the HDFC Bank Limited by a weightage of 6.17%, while the top 10th position is given to the State Bank of India by 1.57%. Now, if you take a look at the index returns as on August 30, 2024 from the data gathered, as you can see from the tabular column and the graph presented here, that in 1 year it has produced a return of 42.13%, and in 5 years it has given a return of 23.21%, and since inception it has given a return of 15.82%. And if you take a look at the graph presentation here, that it shows a steady and significant rise in value over time, especially after 2020. So this trend reflects long-term wealth creation, likely indicating a stock market or in investment index performance which is very good, performing well in the long run compared to the short-term period. Now, as we have a basic understanding about this fund as well as the index it is representing, now let's move on to analyzing whether investing in this will be suitable to our investment portfolio or not by analyzing the pros and cons of investing in this fund. So let's start with the pros. So there are four key advantages of investing in this fund. So number one, comprehensive market exposure. So the biggest strength of this fund is that it gives investors exposure to all market segments like large cap, mid cap and small cap stocks. So this means you get a broad diversification within a single fund. And second, passive management strategy. So this fund follows a passive strategy by tracking the Nifty total market index, which means lower management fees compared to an actively managed fund. You can benefit from lower cost while still getting market-wide exposure. Number three, less bias towards a single sector. Unlike some funds that might concentrate heavily on one sector, this fund spreads your investments across various industries, helping to reduce sector-specific risk. And lastly, number four, good for long-term investor. Because it invests in the total market, the fund could be a solid choice for long-term investors who wants to ride out the short-term volatility and gain from the overall growth of the market. So these are all the advantages you can get from investing in this fund. Now let's take a look at the disadvantages. So one of the four major potential drawbacks of this fund is the limited flexibility. Since this is a passive fund, there is no active management to navigate market dips or capitalize on short-term opportunities. So the fund will follow the market, both the good and the bad, and try to replicate the index as much as possible. Perfectly. So number two is the small cap exposure, which increases the risk. So while broad exposure is great, the inclusion of small cap stocks adds more volatility to the fund. So small cap companies can be a little bit more unstable compared to large caps, which could mean sharper swings in value. Number three, potentially lower returns in bull market. So during strong bull market period, large cap stocks tend to dominate performance. So since this fund is diversified across all segments, it may not deliver as high returns as pure large cap funds during these periods. And number four is the market dependent performance. Because it tracks the entire market, the fund's performance is entirely market dependent. So if the market performs poorly, the fund won't have any protection from downturn or defensive strategies. So you need to consider all these potential risks as well while choosing to invest in this fund. And what is the final takeaway from our analysis? Is investing in the Mirae Asset Nifty Total Market Index Fund worth or not? As you can see from our analysis that it offers broad market exposure at a low cost, making it a great option for investors looking for long-term growth across all market segments. However, its passive nature and small cap exposure means it comes with higher volatility and no defensive measures during the market downturn period. So make sure to align your investment goals and risk tolerance and see if it aligns with these factors and then decide to invest in it. So it's completely up to you as an investor and your unique financial situation and your financial goals to see whether this fund will be suitable to your investment portfolio or not. But our personal opinion is that if it as an index fund, it might be suitable for an ultra conservative investor who's not willing to invest in actively managed funds at all. But even then, there are similar index funds out there in the market that has a lower expense ratio and a lower tracking error compared to this fund. So if you want to invest in a similar index fund, it's better you choose fund which has a lower expense and tracking error. And another thing is, if you want your investments to beat the market itself and you want a dynamic fund allocation and you're willing to take a little bit more of risk, like you're an aggressive investor, then actively managed funds could be more suitable for you as they have the potential to deliver higher returns than an index fund like this. So finally, if you're struggling to take a decision regarding which investment will be best for you, as you do not have the knowledge about the market or you do not have the time to research about the market, and then you can definitely consult with a professional financial planner for more professional guidance, and they will look at all the factors for the suitability of the fund you're choosing to invest in, like factors like investment objective, risk profile, overlap ratio, allocation, and see if it all aligns with your investment portfolio and your unique financial situation. So this will make your investment journey simplified and more helpful for you in the long run. So investing through professional guidance will also be a good choice for you if you want it.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.